चले okay भाई चले इंशाल्लाह hopefully this will be useful for all of you. तो ये this idea came I think Masood bhai was asking के living trust के बारे में, and I did this recently myself. So this is why it's a do-it-yourself revocable living trust. The context is that, as most of you know, if you go to a lawyer, they charge you arm and a leg to get a living trust, and it's really not complicated. And secondly, it's not that uh, big of a deal. I mean, we don't go to a lawyer when we decide things amongst our family, and this is not anything more than just deciding our family, how we're going to do the sort of your will, and how you want to distribute the property. So it's a vehicle provided by law which we can use, and it's very really simple, and I'll go over that with you. So again, this is not legal advice, so I have a disclaimer there that take it at your own risk. But so don't consider this as legal advice or the material I'm going to share. But at the same time, I mean, I've done this, and it's really, really easy and straightforward. Uh, so feel free to ask questions, and I'll stop after every slide or two to give you a chance to ask questions. But before we start, let's recite some ayah related to what we're going to talk about today, inshallah. Bismillah ar-Rahman ar-Rahim. ولا نبلونكم بشيء من الخوف والجوع ونقص من الأموال والأنفس والثمرات وبشر الصابرين. And we will surely test you with something of fear and hunger and a loss of wealth and lives and fruit, but give good tidings to the patient. الذين إذا أصابتهم مصيبة قالوا إنا لله وإنا إليه راجعون. Who, when disaster strikes them, say, indeed, we belong to Allah, and indeed to Him we will return. وَإِنَّا لَنَحْنُ نُحْيِي وَنُمِيتُ وَنَحْنُ الْوَارِثُونَ. And indeed it is we who give life and cause death, and we are the inheritor. So ये दो सूरों में से है. This one is the ayah from one Surah Baqarah 155 and 156, और ये है ayah from Surah Al-Hijr, which is the 15th surah, ayah number 23, which is related to what we're going to talk about, because we are talking about our planning after life, and the trust and the inheritance, and how we're going to transfer that. So inshallah, let's start. So what is a revocable living trust? Everything is from Allah, as we know, and it will return to Allah, and we are only trustees of everything given to us by Allah during our life. We leave everything behind at our death to our heirs as its future trustees. Or my mother used to say that the only thing you take with you is what you've eaten already. Everything else that you have stays behind. So that's the only thing that we really own, what we have already eaten, and it's become part of our body. Everything else is not ours. We're just using it, we're taking care of it for our future generations. So fortunately, US and Virginia government has legalized this concept of being trustee of everything in our life. So this is a beautiful thing that US government has done, that you can become, like, not only conceptually, but legally you can become a trustee of everything that you own, and sort of keep that as your, like, your name is not on the property, it's the name of your trust, and you're just a trustee of that trust. So through this revocable living trust, we can literally become trustees of everything we own and pass it to our heirs as its future trustees. So this is a very beautiful way to transfer the property that your family owns from generation to generation. I mean, you can keep this trust going if you want, and just keep the property in the trust and very easily move it through the family, instead of going through the courts and trying to do inheritance through the court system. So that's the beauty of this revocable living trust. Revocable living trust is a formal contract. It's a contract that you do with your own self. That's why lawyers are not involved, because you don't bring lawyer to talk to you, your own self. It's a contract with your own self and your children at most, where you're going to define how you're going to keep the assets that you have as part of a trust owned by your family. So it's a formal contract with yourself and your children, and does not need to be registered in any court. There is no registration required. It's a piece of paper that you write it on and then you notarize it. That's it. That's all you have to do. So it's not registered with any court, any state or federal authority, and even with IRS. You can go to IRS and get a tax ID, but it's really not required. And it might be very few situations where you want a tax ID for your trust, but nobody really needs to know other than the title of your property that you put under the trust. That's all that changes. So it's really something very private, and you don't share this with anyone, but it's a legal document, and that can basically allow you to hold the assets under the trust instead of holding it under your own personal name. So it's in the trust. When you die, automatically it remains with the trust, and you don't really need to worry about courts, taxes, or anything about it. It just stays with the trust, and then the trust defines how this will be transferred to the beneficiaries. And I'll talk a little bit more about it. It avoids the need for last will and probate court to transfer your assets to your heirs. You can still have a last will to distribute the share to other near relatives based on the Islamic inheritance law, instead of including them as beneficiaries on the trust. So you need to be careful when you're putting beneficiaries. Beneficiaries have some rights based on this trust. So if in Islamic law, basically you have inheritance. You have inheritance of your siblings, your parents, and so many other people, depending on your situation. But you don't want to make all of them. You don't want to use the trust as an inheritance instrument, because then basically you have to put all those beneficiaries and their share, and those things keep changing also. Plus, you don't want to get in a legal situation where somebody outside your family, or I mean somebody outside your children has a claim on something, and then it goes to court. So just to keep it really private and within your family, normally you would keep the beneficiaries limited to yourself and your children, and I'll talk a little bit more about that. But you can still have a last will and tell your children that this is how I want it distributed. So they will take ownership, and then they can distribute it for you without involving a court. Now, what are any questions so far? Sorry, I didn't ask.
Amir, this last part was not clear. Like, what is the, if you're leaving your property to your family, say as trustees, does that leaving not include information about who gets what? Is that a separate piece of information that is not related to this trust business?
You can, I mean, there are two ways to do it. You have beneficiaries, right, of the trust. And I'll go over it, I'll explain that in more detail. You have beneficiaries. You can define every beneficiary that you have and the percentage they get from the trust. You can do it, but then it becomes more complicated, because every beneficiary has a right on the trust, right? And they can basically come and go to court or things like that. So you need to basically keep, if you want to keep it private, instead of putting every beneficiary on the trust itself, you can write a last will for your family or the beneficiaries that you have on the trust to distribute it according to your wishes. And this last will not go to the court, because this last will is based on what the trust owns. So your trustees can do it for you. Does that make sense? I'll show it to you a little bit more in detail.
मैं एक बार कहना चाह रहा था
जी.
about the it does not need to be registered with the court in
Yeah.
Virginia. I went to actually before this session, I went to the Loudoun County Court here in Leesburg, and I asked them, and they confirmed that the will and the trust does not need to be registered in Virginia.
Yeah.
According to Virginia, so it is confirmed by Loudoun County Court.
Yeah, yeah. You don't even have to show them the document. I'll go over that a little bit. All they need to know is that the name of the trust, and they basically literally trust you with that. You don't even have to show the document.
I asked them how will become legal. So they said
notarize.
You have to tell your friends.
Yeah, exactly.
Where the trust is.
I mean, the main thing is you have to notarize it. I'll show it to you. So it's really an interesting thing, which lawyers make it really complicated. So here's what happens. So this is basically where we're getting into the meat now. What are the parties involved in a revocable living trust? So these are the 4 different parties involved. It is an unregistered formal contract between 4 parties. Actually, there are two types of trustees. So it's 3 parties, but 2 types of trustees, and I'll explain that to you. Which can be amended, revoked at any time. So it's never final. Till the last day, you can change it, and you can even revoke it. So there is no risk that you put something and then it cannot be changed. It's a really, really flexible thing. The only thing that you don't want to change is the name, because your properties are under that. Other than the name, you can change anything you want. Yeah, pretty much any day and anytime, like many times. It really doesn't matter. Whatever you have at the end is what will be effective. The owner of the assets need to be part of all 3 parties. So that's the key thing. For you to do it in terms of taxes and everything, the current owner of the property that you're putting in the trust, those have to be part of all these 3, meaning grantor. They need to be the grantor, the person who grants the assets to the trust. So the whoever is putting the assets or basically transferring the assets to the trust, they're called grantors, and they need to be basically in the grantor role, all of them. And it's not necessary that the assets are owned by every one of the grantors, but each grantor who's providing the assets need to be on the trust as a grantor. Then there's a concept of trustee. This is the key sort of concept. This is the person who manages the trust, everything according to with the trust, all the assets and everything that has to do with the trust. Once the grantor puts the assets in the trust, the trustee becomes the manager. And in this case, the grantor and the trustee needs to be the same people, because otherwise, if they're not, then basically the assets that you're trying to transfer, there are problems. They don't either allow you to transfer in that case, or you may have to pay tax if you're trying to transfer your assets to a trust where you're not the trustee and you're not the beneficiary. Then you have to pay tax. So that's why the person like me and Alia, I mean, both are the grantors. We are both the trustees, and we're both the beneficiaries. Now, in case of trustees, in addition to the grantors, you can have additional trustees. So I can make my children trustees in addition to myself. but I need to be the trustee. And there is no limit on the number of trustees, really. You can have any number of trustees, and trustees don't need to be part of your family. Trustee could be a company also who manages trust. So there is no limit on it. The only thing is for a living trust and for you to transfer assets to it without tax, you need, the grantor has to be the trustee and the grantor has to be the beneficiary, because otherwise basically there's tax becomes applicable, or like the banks don't allow to do that. If you're not the trustee and you're trying to move your bank account to the trust, they will not allow you, because they want to make sure that you continue managing. You're still the manager from their perspective. It's just the name, the title is changing on the bank account, but you're still the owner of the
Oh,
bank.
yeah.
So
Amir Bhai, I just have a question
yes,
here.
yes,
So you mentioned you can avoid taxes. So what do you mean by that?
I'll
Like,
tell you.
is that in terms of like tax on the inheritance, or?
Both. Yeah.
Okay.
So at the time when you transfer, if you are transferring, basically you're moving, and I'll go over the deeds and everything with you
Sure,
in a few
sure.
minutes. So I'll explain to you what happens. And there is a tax exemption law that you have to basically apply to get the exemption on the tax. So I'll go a little bit more in detail on this. So the key thing is that the grantor, usually husband and wife whose name is on the property, your house, your bank account, brokerage account, whatever you have, they need to be the grantor. They need to be the same people, need to be trustee, and they need to be beneficiary. And then your children can be beneficiaries. And also we have a concept of successor trustee. Now what happens is that until the grantor is alive, the trustee is the grantor. But when the grantors die, one or more grantors die, you can transfer the trust to a successor trustee. And normally the children are the successor trustees. So they automatically become trustee. As soon as you die, they become trustee. So that's basically how you transfer the control of everything to your children, because they are the successor trustee, and you can make one or more of them as a successor trustee in this case. Yeah. So mainly the thing is the grantor continues to own all assets as trustee and pay taxes and everything. So you pay your personal income tax, even though the property is under the trust. But since you are the trustee and the beneficiary of this and the grantor, you do your income tax 1040 the same way as you do today. No difference. Absolutely no difference. The IRS doesn't care about living trust. So your property, from IRS perspective, you still own it, but from property title perspective, it's under the trust. So it's an interesting thing. No need for ID, tax ID for the trust, but it can be acquired from IRS. IRS does issue a tax ID if you want it, but there is no need because you don't file tax for the trust. You file personal tax in this case. Now, this is like a quick chart to show you. So the father, mother, let's say like the 3 children, I'm just using my example. So the father and mother who are the grantors, usually the property is in 1 or 2 or both of their names. They need to be the grantors, they need to be the trustee, they need to be the beneficiary. In addition, your children are also beneficiaries. And then you can assign 1 or more or all of your children as successor trustees. Successor trustees take over the trusteeship immediately and automatically when both the trustees are gone. So there is basically, they automatically become the trustee, and that's how you write it. And I'll show you how that works. So that's written in your sort of trust contract, that this is how it's going to happen, that these are the trustee. So mainly this is who is controlling everything. And
Amir, what
because
if one of the trustees dies? So say the father dies, the mother is still alive. What happens to the
so in
successor
that case,
trustees?
she remains a trustee. Until both of them die, successor trustee doesn't become effective. But they can at any point add a new trustee. So I can let's say if I die and Alia is there and she's the trustee and she wants say Amna to become a trustee also. She can say do an amendment and say Amna is trustee now. So now basically both of them are trustee. You can change this at any time. But the requirement is that this is the requirement, that the people who grant need to be the trustee and the beneficiary. You can add your children later on also. You can have children later on, you can add them. There is no problem with that. So the key thing is this first two rows, this is legally required. Because otherwise you have tax problems. Because when you transfer the property, if you're not the beneficiary, then you have to pay the tax. You cannot do $0, and I'll show you on the deed. You cannot do that. You have to be beneficiary and the grantor and the trustee to transfer the property to the trust. So that's the key.
Question here.
Sorry?
Successor trustee. Let's suppose, inshallah, I pass away and my successor trustee goes to Suhail. And can he put a trustee in
Yeah,
place?
you can resign as a trustee. I'll go. Yeah, you can.
Okay.
Yeah, I'll go actually the document with you, the template that I have, and I'll go over the clauses that you can put in there. So I'll go over that with you.
Amir bhai, is there a template for this?
Yes, I'll go over it. I'll show you the template for the deed and a template for the actual trust document.
Okay.
So I'll walk through that quickly. Now, what assets can be put in the living trust? You can pretty much put everything except for a few things, and I'll go over that. So you can put all your real estate with or without mortgage. If you have a mortgage, then you have to tell the bank that you are transferring it to a trust, and there might be some additional paperwork for the mortgage to. The mortgage remains with you because you're still the trustee and the grantor, but they will have to transfer the deed over to the trust. Bank accounts you can do, there are forms available on the bank website. You download that form. Some of them require notarization, some don't. You can do that. Brokerage accounts you can transfer under trust. Cars, boats, anything that you own, you can transfer. The title, you can just write the trust name and go to DMV and transfer it. Business also you can transfer to the trust as an owner, safe deposit box and things like that. The things that you cannot or should not try to do are life insurance and 401k. Life insurance has its own beneficiaries and they don't allow you. 401k also has its own beneficiaries listed on it, and they're tax wise it's not allowed. Basically you have to roll over 401k to change the name, and that's basically defeats the whole purpose of 401k. So 401k and life insurance you cannot or should not, but everything else you can put under the trust. Is that clear?
I'm a very question, quick one.
Yeah.
Yeah, if father and mother, if any of them die, everything goes to the other person who is alive, right?
Yes.
And then if both die, then the property and everything automatically goes to the children, whether you write this trust or not.
Yes, you have them as beneficiaries, but before they distribute the property, one of them or more of them become the successor trustee. So they become trustee first.
Yes.
And then as a trustee, they dispose of the trust.
But my question is, you don't have to have this thing written. Isn't that automatic procedure?
It is by law. It is automatic, but it's right. It's good to write down what you want your children to do so that they know and they have it written down. Because otherwise, yes, I mean, by law, this is how it's going to happen.
Okay, thank you.
Yeah, this is here. I
Amrit.
just want to comment on that. If you own the property between husband and wife, it's depending on how you hold the title. It's you hold it jointly with right of survivorship. If you have that between husband and wife, generally if one passes away, it automatically passes on to the next person.
Yeah.
But it does not pass on to the kids. So this is where it goes into different problems and issues, and you want to protect it.
Yeah, that's basically the living trust does that. Yeah, but if you're owning the property in your name and your husband and wife owning, one can die and the other one assumes it, but beyond that it doesn't transfer. But if you put it in the living trust, it's part of the trust. Now whoever is the trustee and the beneficiaries of the trust will automatically get it. That's the beauty of this, right?
Can 529 also be added to this?
You can. It's a brokerage account kind of a thing. Yeah, you can.
Okay.
Yeah.
Amir Bhai, I was late. This is Nadeem here. One question. So if the kids are below 18 years of age, then?
You can still put them as beneficiary. They may not be trustees. You cannot put them as a trustee, but you can have them as beneficiaries. Yeah.
In that case, who's the trustee if the kids are not 18?
You can, I mean, you can, initially you are the trustee, you and your wife are the trustees, right? But as a successor trustee, you can identify somebody in the family other than your kids
as a
successor trustee. And that successor trustee will then transfer the assets to your kids later on.
All right.
So you will, in that case, you may have to assign a successor trustee who's not your kid. You may have to go outside your family for that.
Amir, what about overseas assets?
Overseas assets are not covered by US law. So I think that would be, I'm not sure how you would, because US law covers the assets. I mean, you can write a will for that, in my opinion. In the will, you can write the overseas assets, because even if you do write them in the trust by law, basically it's within US and the state you're in. So it doesn't apply. I mean, the foreign government may not recognize the trust, right? So that's the problem, because the deed or the title of the property is outside US, and unless that government recognizes your trust in US, they will not transfer the title to that. So you can try to see if there is a way to create a trust in that country and then transfer the title to the trust in that country. I don't think you can do it in US. So you may want to check on that. I'm not sure. Okay, I have several useful links over here that will give you the information. The first one is basically the actual law. And let me show you some of these now quickly. So I'm almost done with the presentation, and then I'll go over the actual deed the trust document and the deed document with you. So this is the law. This is the actual trust law. And the portion that's applicable for us is the revocable trust. So these are the 4 laws that are specific to a revocable trust that you can read through, and basically what is the law that enables this to happen. There are all other general trust laws are here also, but this is covering all kinds of trust. But the revocable trust is this Article 6 only. Then I have another document, a website. This is an interesting one. This explains the the guide for Islamic Living Trust. It talks about the inheritance and how what's the how useful this is from Islamic point of view. So you can read this. That basically it allows you to control how you want to manage inheritance without have to deal with the US courts. So you basically have complete control over how you want the inheritance to happen, because otherwise you are dependent on the US law, and US inheritance law is different from Islamic inheritance law.
Amin, I have a question.
Yeah.
So I don't know, I think I need some clarification. Like the way we think about it, that if the husband dies, everything goes to the wife, and if wife dies, then everything goes to basically the children. लेकिन जो मैं इस्लामिक वो पढ़ रहा था उसमें
नहीं है.
What I understand is that if the husband dies, the wife gets only 1/8 of the property.
Yeah.
Right? And everything goes to the children. So is it right or
not everything? Even if you have your brothers, your parents,
right?
So it's actually complicated.
Right. But my question was that the wife only gets 1/8.
ये तो अल्लाह वाला क्वेश्चन आपने कर दिया, ये तो अल्लाह ही बता।
नहीं, मैं उसकी लॉजिक पूछ रहा। I want to clarify. Is this right? That wife only gets 1/8.
That कुरान में दिया हुआ है। ये जो है वो लॉ जो है वो कुरान में बहुत तफसील से सूरह निसा में दिया हुआ है कि किसको क्या मिलेगा। उसमें अल्लाह ने लिख दिया है कुरान में कि ये वाइफ को इतना मिलेगा, बच्चों को इतना मिलेगा, भाई को इतना मिलेगा, माँ बाप को इतना मिलेगा। उसकी I mean, it's all written down. It's not hadith or anything. It's in Quran. So, and why is it is basically a difficult question. Because
yeah, no, I'm not.
Like Amir Bhai and Imran, just a word of caution. Like anything else, ये कुरान में लिखा हुआ है इसका, लेकिन still it's a fiqh का problem है ये, और depending on which fiqh you follow, मतलब कि शियाओं के लिए और अहले सुन्नत के लिए there are certain different interpretations of how deep the beneficiaries go. तो इसके अंदर best advice यही है कि we should really seek proper advice, so कि हमारी जो शरीयत है उसके अंदर कौन-कौन इसके beneficiaries हैं and under what circumstances. It depends who's the survivor, who's surviving, who's not present. But if any good news, शियों के अंदर जो है जो shareholders हैं वो ज़रा कम होते हैं. अहले सुन्नत में it can go into even uncles and second cousins and all, but I think in Shia fiqh it does not go that far.
उसका जो है it's basically tiers होते हैं. So उसमें ये होता है कि आप you start with the immediate circle, which first tier is basically daughters, your wife, your children, your parents, and your siblings. Siblings may be brothers mainly, but anyway, that's the first tier. And then if they are not there, then you go to the next tier of your grandparents, your cousins, or your nephews and nieces, or your grandchildren. So basically, it's basically circles, and you keep going wider and wider if you don't have anybody in the immediate circle. But anyway, we're not going to discuss inheritance there. That's a whole topic by itself. But yeah, वो है law. Basically, 2/3 जो है वो आपकी immediate family को मिल जाता है अगर आपके parents नहीं हैं. अगर आपके parents हैं तो वो भी आते हैं, और 1/3 जैसे normally जैसे मेरा है कि I don't have my parents, but I have my wife and children, and I have my siblings. So 1/3 of inheritance go to my siblings, and 2/3 go to my wife and children. So that's how it is.
And I think there's a concept of residual in there as well. बाद में portions ऐसे होते हैं कि you don't 100% disperse those off. So the remaining is called a residual. फिर उस residual की भी जो rights of owners होते हैं वो different tiers हैं उसके अंदर भी.
There are actually
gets
websites.
A little complicated.
There are inheritance calculation or inheritance calculators, Islamic calculator. If you enter your family, उसमें it tells you who gets what, and उसमें शियों वाले भी calculator भी हैं available. So you can get basically that done very quickly, easily.
एक मैं maybe it's the right time मैं एक चीज इसमें और भी ऐड करना चाह रहा हूँ, because I think that you are going towards the revocable trust, right?
Yes.
But there's another one which is irrevocable. So
irrevocable का कोई फायदा नहीं है. The revocable one becomes irrevocable immediately on your death. So there is no benefit of creating an irrevocable trust because आप खुद ही फंस जाते हैं उसमें.
नहीं, उसपे एक एडवांटेज था, because I was looking at कि भी revocable और irrevocable में क्या फर्क है. So revocable and why you do that. So ये चीज ध्यान में रखें कि revocable you do because you want to avoid number one confusion, the number thing you want to avoid the probate. तो probate से आप बच जाते हैं, right? और वो भी आपकी बात सही है कि once you are dead, it can't be, it is automatically, you know, irrevocable, right? लेकिन एक दूसरी सिचुएशन को irrevocable कवर करता है, और वो ये है कि let's say you don't die, but you go into the old age where you may want to get some benefits from the government. तो अगर आपके नाम पे कोई प्रॉपर्टी है या अगर आपके अपने पास एसेट्स हैं, तो आपको बहुत सारे जो गवर्नमेंट के बेनिफिट्स हैं वो नहीं मिलते. पहले चेक करते हैं कि आपके नाम पे प्रॉपर्टी है, आपका बैंक बैलेंस कितना है. बट इफ यू क्रिएट अ इरिवोकेबल ट्रस्ट, उसमें ये होता है कि आप सारे राइट्स छोड़ देते हो, बट देन यू कैन गेट द गवर्नमेंट बेनिफिट्स.
You can the beauty of this is that you can change this trust in any given time. You can change it to a revocable later on. You don't have to do it now.
Right.
This trust is completely in your hands, and you can change it. And even if you create a trust document, it doesn't mean anything until you put assets into it. Until you put property under the name of the trust, it doesn't mean anything. And to revoke a trust, you don't have to destroy that document that you wrote. All you have to do is take the property out of the trust. It's automatically useless at that point, because the only effectiveness of the trust is when there is a property under its name. If there is no property under its name, it's just piece of paper. Doesn't mean anything. A lot of people create their trust but never put the property under it. That trust is useless. Basically, there is nothing until you transfer property under it. It's just a piece of paper.
Amir, two questions. Sorry. Firstly, what is this probate thing, which I don't understand? Secondly, आपने capital gains का जिक्र किया था कि the capital gains calculation happens not from the time when, I think that seems to be a relevant factor to you. इससे जरा illuminate करें.
So let me explain these. So first of all, state tax जो होता है, since it's not in your name, so probate court जो होता है ना, when property is in your name and you die, to transfer that property to your legal heirs, you have to go to court, because your name is on the trust, on the property, and you have died. Now you go to the trust and show your relationship and legal heirship, and based on that, court orders to transfer that property from your name to your heir's name. So you have to go to the court for that, and that's what the probate court is. Basically, when you die, even if you have a will, but if the property is in your name, you cannot transfer that property unless the court orders it. And you have to go and prove to the court that you are a legal heir, and you have to, if there is a will, you show the will to the court, and then based on that will, court decides who gets what. So there could be multiple legal heirs, and then court is the one who decides what portion of the property goes to whom. So, and that's based on the US law, in fact, the state of Virginia law, right? So you have to go through that. It doesn't matter what Islamic inheritance means. They will go by the legal heirship based on the Virginia law, right? So the court, and that takes time. It takes months sometimes, and it takes cost, because you have to have lawyers do work, and if you put this property under living trust, you don't have to go to the court because it's not in your name. The property is in the trust name, and the trustee manages and has full right to transfer that property to anyone. And the trustee can transfer it to the beneficiaries without going to the trust. And when you go to the court, they then calculate your estate tax also. Because when you go to the court and say, this is the property and this is what needs to go, they first look at the total value of the property and say, you have to pay tax on that. In the case of living trust, you don't go to the court. They don't know about the value of your property. You manage the whole transfer outside the court. There is no estate tax. The second thing is...
Sorry.
Yeah.
You continue, finish. Sorry, I thought you were done.
No, go ahead.
When I did some research also on the probate, it takes almost 1.5 years to 2 years for the judge, and also a lot of expenses, and the beneficiaries have to wait until the end.
Yeah, you cannot touch the property. Yeah.
The other thing that all the information becomes public. Everybody knows about your assets. It becomes it becomes public information.
Yeah, and you have to pay tax, estate tax, depending on the value. If you go over the threshold that they have, you have to pay taxes. They take the tax first and then give you the remaining part. The second thing is the property value. So if you go through the probate, if the deed is not in the trust name, then what happens is the value of the property at the time of transfer is based on the value of the price that was paid when it was purchased originally, right? So if I bought something 10 years or 20 years ago, and now the value is much higher, and if I don't put it under trust, when you get this property, you have to pay the tax, the gains tax, based on the original price that I paid and the difference that has happened to the point when you own this, and you have to pay the tax on that. In the case of trust, what happens is that since it's under the trust, and when the beneficiary gets it, it gets the current price as the price at which they got it. So when they sell it, the difference would be less because they will hold it maybe for a shorter time. You may have held it for 10 years, 20 years, and the price may have gone up. But when they get it and they sell it immediately, there is no capital gains because they basically just got it at the current price and they sell it at the current price. So for them, there is no capital gains because the price that they will use for capital gains calculation will be the price when the beneficiary got the property in their name, which is basically after your death. So that's the another benefit.
Thank you, Amir. These are very substantial benefits, actually. Thank you.
Yeah. Okay, I'll go over this Loudoun County real estate site later, and these recording a little bit when I go to the deed. Then there are other sites like the benefits, 4 reasons to consider, as we were discussing why we would do revocable trust, and tax consequences. There is another site for this. I just put the link. I won't go over it right now. So let me switch to the actual document now. Any questions before I jump into this?
Yes, Amir bhai, one question. Could you, maybe I missed that part. What's the advantage of having a trust as compared to having a just regular living will?
We were just talking about that. Court.
Yeah, right.
Courts are involved in the living will. The last will. You have to go through the court.
I thought if you have living will, court is not involved in that case.
No, will has no. Trust is where will is basically your property is still in your name. So you have to transfer the property.
Oh yeah, transfer of power.
You have to go to the court.
Yeah, I understand.
Will doesn't change the ownership of the property. The trust does, if you put the property under the trust. And I'll show you how.
Amir bhai, couple of questions here.
Yeah.
ये capital gains जो होता है basically जिसका आपने जिक्र किया है, this is on even अगर ये आपकी primary residence थी या सिर्फ investment properties पे होता है?
नहीं उस पे भी होता है, primary residence पे भी. When you sell It's the difference between what you bought it for and what you sold it for. That's a profit. The capital gains is on that profit, and you pay basically long term if depending on how soon you sold. It's the same capital gains basically जो आप stock में भी pay करते हैं. So you basically, it's the profit that you make, you pay tax on the profit. In this case, since the price is set when the beneficiary gets the property, which is the same price, current price, then basically there is no profit. So you don't pay a tax because of that.
I hear you. Okay, thank you.
Okay.
Amir bhai, I have one more question.
Yes.
Just wanted to clarify, I want to make sure I got it right. So making a revocable trust really does not involve a lot of effort except doing a template. But how about transferring all the assets that, like you mentioned,
I'll
about
show you
cars,
that.
back balance and stuff? So does all that require a lot of paperwork?
No, not a lot. I'll show you. The most difficult one is the property, the houses, and I'll show you the deed, and it's very quick. I got it done it takes to do it few minutes or maybe an hour to do the deed, and then to get it approved and transferred, they did it in about less than 3 weeks. So I submitted it, and within 3 weeks they sent me, and I'll show you basically how that works. It's pretty straightforward.
Thank you.
Okay. So this is basically the document, and you can do a very simple document or more complicated. It's up to you. I got this template and I worked on it to make it sort of customized to what I wanted. And this is the sort of similar to what I have. So I'll go over that quickly with you, and we can go section by section on this. So basically you have to give a name to this trust. And so the first thing is this you fill out when you sign in front of a notary public. This is the date when this trust becomes effective. So this date you basically fill in when you sign it in front of a notary public. The things that you fill out first, those parties that we talked about, the grantor, this normally would be you and your wife. If all the assets in your name, you could only yourself be the grantor. So whoever owns the assets that you want to transfer to the trust need to be the grantor, all of them. So if there are more, if your kids have and they want to put it in the trust, and then they need to be over here. So anybody who owns the asset that needs to be transferred to the trust need to be on the list of grantors. Then you
What
have.
if, Amanda, a quick question over here. Let's say between husband and wife, there are certain things that are owned jointly and certain things are not. What happens then?
Doesn't matter. Basically, as long as you're a grantor, either it's owned by you individually or together, you can transfer it to. You need to be a grantor to not pay tax and transfer your property either owned individually or as collectively to the trust. But so either way you can do it. But if you own something and something your wife, you both need to be the grantors, because you will, if you transfer that property which is owned by your wife alone will work. You need to be the grantor on, both need to be the grantor, and then you can transfer all properties. Either it's with both of you or it's one of you. Same.
And let's say,
yeah.
And let's say when within, if let's say whoever the grantor is, so let's say I create this trust and I put my property in there. And if I sell that property, if let's say again, it's my principal residence, does it get capital gains tax on that?
So yes, so in that case, if you sell the property from the trust, because it's in trust name at that point, right?
Yeah.
And basically you will most probably not pay any gains tax, because your price at the time will be what's I'll have to confirm that, because for beneficiaries you don't have to pay, but if you sell it, I'll have to see what price is used for the capital gains calculation. Is it the past price that you bought it at, or the price at the time when you transfer to the trust, which price applies? we can find out more about that. Okay, so grantors is you who owns a property. The same people need to be the trustee at minimum. You can have additional people as trustees, but the grantor needs to be the trustee, because otherwise you can transfer the property, but like bank doesn't allow it. For example, if the grantor is not the trustee, the bank doesn't allow you to transfer the bank account to the trust. So they have their role requirement. So that's why the grantor, the same people who are grantor need to be trustees. You can have additional trustees, but at minimum, all the grantors need to be the trustees. And then basically you define a name of the trust. You can have multiple names also. You can say this or that, it doesn't matter. You can use multiple. Then basically you have this schedule attachment A, where you list all the properties. But listing the property, unless it's that property doesn't have a title or a deed or an owner, that you can just list. Like if you have some expensive watch or something and you want to list that as a property under the trust, you can just list it on attachment A. I'll show you at the end. But if you have a title or a deed or some registry to that property, then you have to actually transfer that title to the trust. Otherwise, just writing it on the attachment doesn't make it part of the trust. So that's the only key. So over here, you list on attachment A, which I'll show you, it's at the bottom, where you can keep adding and removing stuff as you want. That's basically where you list all the properties that are under the trust, which could be, as I said, your houses, cars, bank accounts, brokerage accounts, and all those things that we talked about.
I don't want to take it off topic, Lane. I think, Amir, if I remember correctly, कि the property जिस पे भी आपने purchase किया है ना, 2 लाख की property थी, अगर वो 1 million की हो गई है, if you die, तो वो जो inheritance आपके बच्चों को जाती है, if I remember correctly, कि वो जो current price है उसी पे जाएगी, and at that time you had like 90 days where you have to go to the court and declare it that we're gonna take that price, something like that. If you don't do it, या जिस दिन उस बंदे की डेथ हो गई है, वहां से if the beneficiary sell that property after 6 months or 8 months, और उसमें प्रॉपर्टी राइज हो जाती है, तो उनको वो गेन टैक्स पड़ता है. जिस दिन उनको प्रॉपर्टी मिली थी, उनको पहले दिन से नहीं पड़ता.
बट उसमें ये होता है कि even if they don't apply the tax, मगर state tax लग जाता है. So even if they don't do capital gains, state tax आ जाता है. कोर्ट में जो है ना, when you go to the court, they basically look for if the state tax applies, then they apply that. Right. So मगर इसमें जो है living trust में neither the state tax or capital gains, both are not applicable.
By state tax, do you mean property tax or?
No. State जब आप transfer जब आप मरते हैं, तो आपका जो state tax होता है वो estate tax कहलाता है. जैसे उसकी एक लिमिट होती है, जैसे 5 million जो भी है, I think उसकी minimum. If your value is more than that, you have to pay a specific tax on the total. तो वो अलग टैक्स है.
ये वो inheritance tax की बात कर रहे हैं ना?
हाँ, inheritance tax जो estate tax कहलाता है, वो apply हो जाता है. But if you go to the court, if you don't go to the court, there is no state tax. We can look into this tax portion. I mean, there are definitely benefits of doing living trust. They might, I mean, the key benefit is that you just don't have to go to the court at all. So even if, so that itself is a big benefit, where your kids don't have to worry about running around courts and lawyers to figure this out. Okay. Then we have a section on life of the grantor, basically what you want to happen during the life of the grantor and in other situations. So trustee shall hold, basically, so trustee in this case is you, in this case. So during the life of the grantor, basically the trustee holds, manages, and administers the trust state on grantor's request. So grantors is the one who still controls, even if it's a different person as a trustee. The grantor is the one who tells the trustee what to do, and the trustee is going to do what the grantor tells them to do. And there are a lot more details here. I'm not going to read through all of this. I'll send you this template, and you can read, and we can have more Q&A later on if needed. But main thing is that the grantor stays in control of the trust until they're alive, even if they're not physically themselves trustee. They still control everything that the trustee does. The trustee only does based on their request. Now, the death of the grantor, that's where basically you define what do you want to happen when you die. Like your personal property, that's not something registered, like your furniture, your house, the other things that you want. What do you want to happen with them? How do you want them distributed? Residuary property, like undistributed income or anything else that you have. How do you want? And then you list the beneficiaries. So who are the beneficiaries on your death? Then you list basically the names, and the grantors and trustees have to be there. The first two, or whatever, whoever is a grantee needs to be a trustee also, because if you're not a beneficiary and you're a grantor, then basically when you go to transfer the deed, you don't get the tax break. You cannot do it, claim tax exemption when you transfer.
आमिर भाई मुझे एक क्वेश्चन है अभी जो आपने कहा कि the grantor, when the these two grantors if they die and these beneficiaries take over as trustees, so can these trustees they cannot become grantor, right?
No,
but they will be trustees. They have the right to include somebody else as another trustee.
Yes.
Do they have the right?
Yes.
So let's suppose they want to, just transfer this trust to a non-profit organization or somebody else they like, or
they can.
They trust. They can do it?
Yeah, they can. Basically, they can dispose of the property. They become the trustee. They have full rights of a trustee, and they can dispose of the property as you have wished. So if you have written a will, or even in the trust document, if you've said, when I die, I want this amount, or this property needs to go to this charity, you can write it, and that trustee will do it for you after you
die. But he or she can change it.
Yeah,
once they become trustee, they can change it altogether.
Yes, they can.
So what happens if these two trustees that have become trustee after your death, if they don't get along or they have some difference of opinion? So what happens in that case?
Two things happen. One is that this trust becomes irrevocable when you die. So they cannot revoke this trust, and the property is owned by the trust. Now, if they have differences, then they will have to go to court, because the property is in the trust name, and you cannot sell the property until the trustees agree to sell it, right? Because if you make both of them say trustee, like if you have two children, for example, and both of them become your successor trustee and they don't agree, they cannot sell the property, and they cannot revoke the trust. So now they have to go to the court.
Thank you.
Okay.
Amir bhai, you're creating this trust. Does it provide some liability protection वगैरह? नहीं, कोई personal liability?
Liability का नहीं. I have not seen any liability protection. Especially in a revocable trust, there is no liability protection at all. I mean, for that, if you want that liability protection, then the best way is to create an LLC and put the properties under the LLC.
Mhm.
And then basically you make your family members partners in that LLC or something like that. That is another route that you could use instead of creating a trust. If you're worried about liability, there are some benefits of it in terms of liability, but when you do the sale or things like that, there is no tax benefit from that perspective, because the price remains what it was when you transferred, and you pay tax when you transfer it to the LLC, the tax, and then when you sell it, then you pay tax again. So there are tax problems over there, but there's liability is limited through LLC.
Okay. So this is basically just like whatever your assets are, those are your any liabilities associated with those are your personal liabilities in this case.
Exactly. This trust is, since you are the grantor and the trustee, pretty much it's considered your personal property until you die. So basically you cannot protect it from liability.
Okay.
That's
And
my
the case मेरे concern ये थी कि let's say I create this trust and I put, let's say, a house in there, it has a mortgage on it. Then does creation of this trust limit me to go and take another, take some additional debt somewhere else? Yeah, nahin.
No, I don't think so, because they, from IRS perspective, and even the mortgage company, I don't think they will consider this as a separate. They will ask you if you have any property under the trust, or the mortgage will still keep your name. Your social security number you'll still be a grantor, even if the mortgage transfers to the trust. You will still be personally as a grantor on it, and as long as you're a grantor on the mortgage, it's counted against you.
Okay.
Right?
इवन किसी और का भी लोन है, अगर आपने साइन किए हुए हैं तो मॉर्गेज कंपनी आपसे पूछती है.
Exactly. If you're a grantor on any loan, it's counted as your loan. Okay.
All right.
Now, continuing, I mean, there are a lot of clauses that, and you can put more or less, it's up to you. Failure of all beneficiaries, this is what we're talking about. If they fail to agree or they fail to discharge the trust to the person named in the will, would entitled to inherit from grantor under the law of state of Virginia. So then basically at that point, if the beneficiaries fail, for example, or beneficiaries also die, for example, and your trust have no beneficiaries, then the state law takes over. And basically state determines who gets this trust or the assets of this trust. So then the state law applies. If you or the beneficiaries of the trust cannot do it, then automatically it goes to the state, and the state law applies. Even if you don't write it, that's how it happens. So
can the beneficiaries be people outside the US? That should be.
Possibly, I'm not sure. Most probably you could. The only thing is beneficiaries, they can be, but they cannot be trustee, I think, if they're not in US. I would think. But they can be beneficiaries, I think.
या आमिर भाई, इस केस में जैसे आप यहाँ पे ये क्लॉज है कि अगर वो आपके बेनिफिशियरी सारे के सारे they also don't survive, right?
Yes.
I think as per state law, तो फिर वो state owner बन जाती है.
Yeah.
Right? But if you over there, if you put a clause कि जी, let's say if something happens and then you transfer it to a non-profit, then probably it won't go to the state.
I mean, yeah, your will may count there. If you have a will and you write that this goes to this, in that case, they may honor it. But the key thing is that the state law, basically state takes over and decides what to do at that point. You have no control over it. Distribution to any person who is under 18. So this is allowed if the distribution is to be made to any person who is not then a beneficiary, any portion of this. So the trustee, you can decide basically how to deal with that. Do you give the money right away to the minor, or hold it and then, or give it to a custodian? So you can define basically how you want it handled. Payments of death, taxes, administration expenses. So any expenses involved need to be paid from the trust before beneficiaries distribute. So any cost of funeral or anything should be paid from, and any taxes that you owe at your death needs to be paid first, which is normally the case in any way. And in making any payments under the article, trustee may rely on any certificate of legal representation and things like that. So then state of grantor, not withholding instruction on Article 4 that we just looked up there in terms of beneficiaries. The distribution of the income and principal need to happen this way. And then there are many clauses over here. So a purchase or retain as investment, any securities. So basically what you can do, securities, properties, real or personal, that you can do. You can take loans, give loans, and things like that from the trust. Then there is trustee powers. So this basically describes what a trustee can do. And there's a long list. Pretty much anything and everything trustee can do, especially after the grantors die. The trustee basically becomes the complete, so they cannot revoke the trust at that point. But beyond that, they have full rights to manage it. And you can read this and even change it if you want. Premiums, like if you have insurance premium or any other premiums, the responsibility of trustee to pay them and things like that, you can write. Distribution by trustee, limitations on exercise of special power of appointment. They can, to make payments on principal or income directly to and otherwise deal with minors. So basically they have full rights as a trustee to manage those things. Accounting wise, trustees, beneficiaries can ask trustee to give a statement, and you can write how often the trustee needs to provide the statement to the beneficiaries of the trust assets and income and all those things. So that's, you can write how often, like I've written over here, like twice a year, or you can write monthly or whatever you want. Spendthrift provision, like you don't want them to sort of go and waste your money. Dealing with third parties, if you are using a trustee as a manager or any other property manager or anything, that you can write over here. Now, this is the successor trustee. Now, this is the second line of trustees. These usually are your children, where you can write that the grantor appoints this person as your one or more person as your successor trustee. And then you can have a second successor also, that if this first successor is not there, you can have a second successor who takes over from the first successor if the first successor is unable to do. Then appointment of co-trustee, you can add a trustee at any point. Any trustee can bring in additional trustee, and that trustee basically will have the rights of the trustee. And then removal or incapacity of, so during the grantor's life, if you shall have the right to remove any trustee, so we can remove any trustee, or if the trustee become incapacitated, they can leave. Resignation, you can resign as a trustee, and so on. Certified copies of trustee or attorney law, anyone. So basically, I mean, there are a lot of things written over here. You can simplify it if you want. Compensation, if a trustee can take a salary or fee or not. Liability of individual.
Amir bhai,
yeah.
If the grantor has some financial liabilities and you have it, he as well has a trust, can those third parties come for recovery to this trust?
Yes. Yeah, there is no liability protection from the trust. Yeah. Corporate trustees. So, and then governing law, the trust is made and executed under the Virginia law. Survival, no individual organization may make any claim or benefit from the trust unless it is determined that the benefiting party has survived the grantor. So basically, the beneficiaries, if they're not trustee, they will not take the claim unless they remain beneficiary after the grantor dies. And then if the
are different states having different laws to deal with this?
Slightly. So the trust law is actually a state law, but
Okay.
I think most states have that. Virginia has it definitely, and I have the link for that.
All
but
right.
Trust is really a state law. It's not federal law, but most states have it.
Okay.
Now, incapacity. So if you become ill or something, or incapable of being the trustee, then basically the other trustee will take care of it, and you'll remain the grantor, but you will not be a trustee in that case, and the trustee will have to make sure that your health and comfort and any cost related to that is paid from the trust, even though you're not actively trustee anymore. Order of death, that's basically another thing that if husband and wife died together, life insurance and things like that need to know who died first, because if both people died and your wife as the beneficiary and both died together, so you can define basically if both die together, who is considered to be the first to die, and then who becomes the beneficiary in that case, and things like that. So you can define that. And then you can define your children, who usually are your beneficiaries, but if they're not, or there's different set, you can write your children. Severability, gender references. I mean, you can have. There's a lot more. Power to alter and amend or revoke. So this is basically where you write if it's revocable, changeable, and things like that in this section. And then basically you sign. So we're towards the end of this, the grantor has to write their names and sign it in front of a notary public, both the grantors and the trustee, successor trustee, and the second successor if you have, or multiple successor. And then you have this is the final sort of affidavit, which is what the notary public signs. So this is basically you're swearing in front of a notary public and signing this document that this is basically what you agree upon. So all the grantors, trustees, and successor trustees sign it, and the notary public notarizes. And the last thing is the attachment. Basically, this is where you list your assets. That's part of but listing here is not enough. You have to transfer the assets. And is this too long, or you want me to go over the deed quickly also? Because I know some of you had to leave. I can quickly go over the deed, how to create the deed. Is everybody okay to stay for another 10 minutes?
Yes. I can stay for another hour.
Okay.
Sure. Yes,
I'll just go over quickly the deed. So this is the house, how to transfer your house to the trust. So the key thing is this. This is the tax exemption law, that by this code, you don't have to pay tax when you transfer. So you have to write this. And I have the link to this in my presentation that I'll send you. So this is the tax code that you have to write. Based on this, they don't charge you any tax. So only thing you have to pay is $27 for the deed registration. That's it. Deed recording fee. Parcel ID. Sorry.
ये जो deed है इसी को quit claim कहते हैं या वो different?
नहीं. So there are two types of deeds. There is a quit claim deed and there's a general warranty deed. It's better to do general warranty deed. So you have to look at your current deed. Normally, if you have done title search and you have a title insurance, then you have a general warranty deed. General warranty deed means that you are your deed, your title is clear, and you're giving warranty for the title. When you sell your property, general warranty deed is much better than a quit claim deal. Quit claim deal means that you're only quitting your claim on the property, but you're not guaranteeing there is no other claim on the property. So generally, this is a better deed, because when you go to sell, if you have a quit claim deal, then they not only they do title search and things like that and title insurance, but also they may sort of have problem with that. But if you have a general warranty deed, that's a better deed, which means that you have done the title search and you have a title insurance and your title is clean. That's the difference between the two types of deeds. So deed is very simple. It's a cookie cutter, but you have to find a lot of this information, the blanks that I have, from the database. So there is this database on Loudoun County database. You can find a house. It's all public information. I'll show it to you. I'll show you my house quickly. Sorry. So if you search, this is my residence. See over here, the title is under my family trust now. So it doesn't have my name. If you look at the sale and transfer history, it'll show you that I bought it from this couple and then I sold it to my trust, and the sale price is 0, because it's really a transfer, sort of $0 transfer to the trust. So I didn't have to pay any tax because of that tax exemption.
Amir bhai, by doing this, did you compromise any rights that you had as an individual owner to your property?
No. I still am the trustee of this, so I have full rights on this.
All right.
I can always transfer it back to me.
Okay.
Yeah.
So Amir bhai, ये deal करने के लिए, do you have to get the permission from your mortgage company?
Yes, if you have mortgage, yes, you will have to. Yeah, because you don't have the deed, right? Mortgage holds the deed. They hold the title. So what happens is, if you have a mortgage, then you have to actually go to the mortgage company and ask them to transfer the mortgage and the deed to the trust. And then they would do it. They may charge you a fee for this. If you don't have a mortgage, then you can just do it yourself. You don't have to pay. But if you have a mortgage, then you actually have to go to the bank, because they don't give you the deed until you clear the mortgage. Yeah.
Oh, deed.
Yeah. So deed may basically, I mean, you write then your name, who's selling, the grantors, who you are basically, and then you write that you're selling it to the trust. And then there are a few things that you find, and you put the name of the trust here. This information you can find from this database. So if you go to, sorry, no, over here. So if I go to, one second, profile. So the first of all, the parcel ID is this. So this is your parcel ID that you have to write as the PIN on the top of the deed. So this is your parcel ID, and then you have to find the deed book and the page on the deed, and that you find from, one second, where was that? I think it's here. Yeah, basically all the things are here. Value, forgetting where was that. So there is a parcel tracking. There is a place where I'm trying to remember where was the page. There is a page and number that you have to go to find that. I'll tell you how to find. This is the lot number. this information goes over here, this lot number. This goes here, deed book and page number you have to find. You'll get from that website. The tax map is there. The tax map is given over here. This is the tax map. And address is there. In the assessment, you go to the assessment, which is the yeah, no, not this, sorry. You have to go to value. So over here you have the assessment, like say this is the assessment, fair market value. So you write the assessment and so on. So basically you fill this out and then you sign it again in front of a notary public, and then you submit it to the recording, to the court for recording. And I have the link for that also here. So recording land, you basically either you mail it to them or you drop off. It's on Leesburg for Loudoun County. For Fairfax County, it might be somewhere else. I don't know where it is, but you get the address. You can either mail it to them or you can just take it and drop off, and then they do the recording, and within like 2-3 weeks they mail it back to you. But if you have a mortgage, then you have to go through the mortgage company to do that, and they may transfer the deed, but they will still keep the deed until the mortgage is there. So you may have to check with your mortgage company how to transfer. So that's pretty much it, what I had for today. Any questions? Any more questions?
Amir bhai, thank you for this, by the way. This was very informative.
You're welcome.
Yeah, I have one or two questions.
Yes.
पहले बात ये कि initially you had said we should not put life insurance and 401k.
Yes.
Forget about the life insurance, but about 401k. Is it only 401k or all retirement accounts?
Normally, I think all, because you already have beneficiaries on retirement account, and retirement account stays under your name. So I think it's all retirement account, like Roth IRA or something. They may also may not be able to transfer.
Okay.
Yeah.
And second thing, okay, so my second question was about the deed, but you showed the deed for the home. So I thought to move your, so that means if your retirement accounts are not in your trust, so there's no need to move that into the
You have beneficiaries defined for life insurance and 401k or IRAs already. So they basically do it based on the beneficiaries because they have their own laws. And so they work with their own law. They don't go to court also. Basically, they automatically use the beneficiaries that you have defined to transfer the assets to those beneficiaries themselves.
So for a typical person like people living here, this trust is usually, as I understand, is beneficial only for your actual properties. Other assets, I mean,
yeah, you put your cars, your bank account. Bank account is important. Brokerage, if you have stocks and you use a brokerage account, that
regular non-trust.
Yeah.
वैसे तो आमिर जो बैंक अकाउंट है उसमें भी बेनिफिशियरी आप डिफाइन करते हो?
करते हैं, but again it will go through court. The beneficiaries don't automatically get control. In this case, if you put it under the trust, then the trustee automatically takes control of the account. They can actually manage that account. So that's the difference by putting it. So everybody, you can define beneficiaries, but the bank will not allow the beneficiary to access, but they will allow the trustee to access. So if you say I'm the trustee of this trust, they cannot stop you because the account is in trust's name. Okay, hopefully this was useful, helpful.
Very informative, Amir bhai. Thank you so much. Learned a lot today.
Thank you so much, Amir bhai.
You're welcome.
Thank you, Jawad. Imran Khan से बात कही थी earlier about the Islamic inheritance, the wife gets 1/8 year or the detail. I think it would be nice if we can arrange Sheikh Suleiman or Sheikh Jalil or somebody, a scholar, to give us a similar lecture or seminar with question and answers on inheritance, detailed lecture.
That's a good idea.
That is something
Yeah,
that
it's a
comes
great
from
idea.
Yeah, inshallah, we'll try to organize one.
Thank you, Bhajan. Thank you.
Thank
You're
you so
welcome.
much.
You're welcome.
Are you going to send us all these documents? How will you send us the documents?
I'll put it on the WhatsApp and
ठीक है जी.
उस पे ग्रुप पे ही डाल दूंगा मैं डॉक्यूमेंट्स.
वो जो ईमेल है उस पर डाल देना.
ईमेल पे ज्यादा और भी लोग हैं. इस पे डाल देता हूँ जहाँ पे मैंने किया. ठीक है. चलो.
Thank you, Amir.
चलो, यू वेलकम.
Thank you.
खुदा हाफिज.